invited John because he has a unique perspective on lending and financing strategies in multiple markets. John works with buyers every day who are trying to make smart financial decisions, and together we're going to unpack a question that many people get wrong. Is price reduction always the best solution, or can a seller credit actually create a better outcome? We'll also tackle one of the biggest challenges homeowners face in how to buy your next home when you still need to sell your current one. These topics may seem unrelated, but they both come down to the same thing: creating a strategy that solves the client's financial challenges instead of focusing only on the sales price. So whether you're a buyer wondering how to make homeownership more affordable, a seller trying to attract serious offers, or a homeowner planning your next move, today's conversation is packed with practical advice you can use right now. John, thank you for joining us today. Let's start with a question, okay? It comes up all the time. Why do so many buyers and sellers, even agents, automatically jump to a price reduction?
I think it's a great question, and it comes down to the fact that most of the time, seller credit is going to be a little bit more complex because it's going to be a different benefit to each buyer, each seller, and the agents have to really have a good knowledge of what that specific client needs and also how a credit might help. And so without knowing all of those things, the go-to solution is usually the price reduction, and also the way the MLS systems are set up and being able to search by price reductions and seeing price reductions to get some more attention for homes that are for sale. A lot of times they're the default just to kind of get more attention on a listed home.
Okay, well, that's true. I do know that, but I'm sure you have some other suggestions. So why don't you tell our audience what else they might want to consider?
Yeah, so in most cases, especially for people with good to excellent credit, a seller credit is going to offer tremendous benefit and more savings compared to the price reduction.
Okay, for a seller, then what's the difference between offering a $10,000 reduction and offering a $10,000 credit?
So a $10,000 credit is obviously going to reduce the price. Now, when a buyer is using a mortgage, they're leveraging most of that purchase price with the mortgage company's financing. So a $10,000 reduction is pretty minute considering they're financing the majority of the purchase price, whereas a seller credit can help eliminate PMI, buy the interest rate down to have a greater impact than a price reduction, things like that.
That's a really good point. I was going to ask you how it would benefit a buyer, the $10,000 reduction versus the $10,000 credit. But of course, that buyer can take that $10,000 credit and put 20% down, or possibly, like you said, avoid PMI. So.
And that's one of the strongest things that we recommend is if a buyer is coming up with their down payment, many buyers still think they need 20% down. A lot of people try to scratch together 20% to buy their house, but with a seller credit, sometimes they could put 10% down, keep 10% in the bank, and still not have PMI using a seller credit to buy out that PMI through what's called a single premium product.
Okay, well, describe the single premium product.
So with single premium, unlike monthly PMI, which is usually the go-to for lenders when they're quoting buyers' rates and monthly payments, a single premium is paid one time at closing, and it tends to be more expensive. So a buyer without a seller credit usually doesn't use it because it adds substantially to closing costs. But with a seller credit, they pay a one-time premium at closing, and then there's no PMI on a monthly basis.
That's very interesting. So if you as a lender obviously look at things different than we as real estate agents, what would you say to a buyer when they're negotiating prices with a seller? What is something a buyer should make sure that they consider and think about when they're writing their offer to the seller?
Well, we always want them to talk to their agent first because every market's going to be different. And in some markets, if your offer includes a request for a seller credit, and maybe there's another offer that comes in that doesn't have a seller credit request at the same price and all other things being equal, you could miss out on the opportunity to buy the home altogether. So you want to make sure with your real estate agent that the market and the listed home is likely to consider an offer with a seller credit. if that's the case, we really like to dive into the buyer's financials and find out what's most important, a lower monthly payment, having more money in the bank after buying the house. Is it a house that maybe you could use some extra cash because things need to be fixed up or you need to furnish it? So finding out what's important to the buyer
And
really
that's right.
helps us
So
strategize.
that's what you do. You get to know your buyer client. You figure out what's the most important thing to them, and then you help structure a program that works around their needs.
Exactly. We
Okay.
focus on what's most important to the buyer.
Okay, so now I'm going to talk about seller needs. If a seller needs to sell their home before they can purchase a new home, do you have programs that can help them with that respect?
We do. And one of the biggest challenges that we see today is sellers don't want to be in a position where, they think they might find themselves homeless. If I list my home but haven't found a new one yet, what do I do? Or if I list my home and then I find the new home and it doesn't sell, what do I do? So we do have some financing products that allow them to buy their next home before selling their existing home. Sometimes they don't even have to have the property listed yet. And it really depends on the seller's situation, which product is best for them. But there used to only really be traditional bridge financing.
Loans, and now you do what, HELOCs and
There's HELOCs, and bridge financing has gotten a lot more creative in
Okay.
terms of how we qualify people, what the repayment on the bridge financing is like, depending on the different products that are available today.
Okay. I think that bridge loans, HELOC loans, these types of things are a fabulous opportunity for sellers. But what I've seen is that you can't have your house listed. It can't be on the market until you've been approved for those loans. Is it the same for you in California?
So it varies by program more than state. So we have some programs where a house cannot be listed when we apply and submit a loan application. We have other products where a house has to be, if it is on the market, it has to be removed from the market to get the financing prior to go on the market again. We have other options where the house can be listed when we apply and get the funding. So it really depends on the product that we're looking for.
Okay, good. All right. Well, tell me about a transaction where seller credit saved the deal.
Sure. So I don't have a specific transaction in mind, but what we see a lot, it happens all the time, is we have a buyer that maybe is barely qualifying because we have our hard stops when it comes to debt to income ratio. So the
Mhm.
percentage of somebody's income that goes toward their debt, there's just certain hard stops. Once a certain percentage is hit, we can't get them a loan. So we've had situations where a buyer's at that limit and they find a home and maybe the real estate taxes are a little bit higher than what we had done during the pre-approval. Or maybe they find the perfect home, but it has a higher HOA fee and that pushes them beyond that limit. Well, with a seller credit, we might be able to buy the interest rate down. Or if they were planning on putting 5% down, maybe now we can use a seller credit to buy out the PMI with that single premium product.
And they wouldn't have the PMI.
And therefore you bring that debt to income ratio back down, even if the home they found was a little bit higher than the pre-approved amount. So we're able to keep the deal together and they're able to buy their
It's
house.
so nice that we as real estate agents have you as lenders to help us work through those as well.
And it takes teamwork because we have to know the market too, and that's where our real estate partners come into play, is understanding, can we use a seller credit? How competitive is that market? Do we have a shot at being able to do these things?
Okay, can you tell me what maybe one mistake would be for a seller who wants to get the highest price or a buyer that wants to get the lowest price? What's something that maybe, they would miss because they're only focusing on the price?
Yeah, I think buyers and sellers both make the mistake of not understanding the markets. And I'm sure you've seen this and your team has seen this, where somebody has to learn the hard way 2 or 3 times
Yeah,
before you give them the
yes,
advice, you tell them what the
that's
market's
true.
doing, and they don't necessarily listen the first time or the second time they miss out on a transaction. So I think really understanding the market and what's happening at that given time is really important. And it's usually a mistake people make once or twice before they finally get it right.
Okay. All right. So if somebody listening today, they want to buy or sell or do both, buy and sell within the next 6 months, what should they do first to put themselves in the right position?
I've heard some people say talk to a real estate agent first. I might be biased, but I think talking to a lender first helps people understand 2 things, right? One is they often can qualify for more than they're comfortable with. especially now with interest rates a little bit
And
higher
not
than
be
we'd like
house
them to be,
poor.
and not be house
And
poor. We
still
don't
not be
want
house
that.
poor. No,
So,
that's right. I don't want my clients to be house poor.
and when we talk to people, I always tell people there's two numbers. There is one, everybody asks, what do I qualify for? And I say that's not the real question. It's what price can I hit to get the monthly payment I'm comfortable with.
And still be comfortable.
Yes.
Okay. Okay, good. All right. All right. John, you're in a unique position because you're licensed in, what'd you tell me? 23
I
states?
think I'm 23 states right now, yeah.
I can't even imagine. And I'm licensed in 2. Wow.
A lot to keep up with.
Can you tell me what difference you're seeing in some of the markets? Maybe West Coast versus East Coast or something like that, and maybe what lessons would apply no matter which area the person's living in?
Sure, and I think I'll start with that as the biggest lesson or advice I would give anybody is the earlier you start, the better your outcome will be. So if you think you might buy a home in 6 months, talk to an agent, talk to a lender today.
Such good advice. I tell that to people all the time. Don't wait to call me. You might not be ready, but at least I can give you some information that will help you make decisions. And that goes for buying and selling.
Exactly. On the seller side, maybe there's some minor work that can be done to their
Yeah.
property that's going to net
Get it
them a whole
ready.
lot more money.
Absolutely.
And if you're a buyer, maybe there's some things we can do to tweak your financial situation to get you better financing to save you a ton of money or make sure you don't miss out on the house altogether. We see that far too often.
That's awesome. Okay. What one piece of advice would you give someone before they enter the market that could save them thousands of dollars or months of stress?
Again, I can't say it early enough, or I can't say it often enough. Start as early as possible. I think 4 months out is the optimal time.
Okay.
Get pre-approved because sometimes a small tweak to your credit and bumping up your credit scores a little bit can help. Sometimes saving just a little bit more to get to that next down payment threshold can save a whole lot of money. And there's often minor tweaks that we can make, but sometimes they take time. So if you reach out to the lender after you've already found that dream home and say, hey, I need to get started, a lot of times you can either miss out on the property or you're going to end up with a more expensive mortgage than you otherwise would have been able to.
That's a really good point because a lot of times I think through this whole process, what you see is a buyer thinking, I just want to get, the best house for the least amount of money, not realizing how they should go about it. So if they spend some time talking to you in advance, that will help them create a plan. That's what you do. You create a plan for everybody.
We create a plan, and the other thing that we're doing in competitive markets, like the one we're in, where
Yes.
homes are moving quickly, is we'll not only do a pre-approval, but we'll work to get the buyer through underwriting so that once they find a home, they're almost as good as cash because they're going to have to do the same things most cash buyers want in that they're going to need an appraisal, they're going to need title work, and they're going to need homeowners insurance. But we're actually going to have an underwriter look at everything else in advance so that when they put in their offer, the seller knows there's zero chance that the financing is going to fall through.
Do you put something special on their pre-approval?
They actually get a pre-approval letter from an underwriter. So I do pre-approvals every day, and I have a pre-approval letter I can send out. And then we have different certificates that are done by our underwriters.
Okay. And then the real estate agent can take advantage of that when they're presenting the offer.
Yep, the buyer's going to get a certificate, their agent's going to get the certificate, and when an offer goes in, I like to call the listing agent and explain that, not only did we go beyond a pre-qualification, we went beyond the pre-approval, and there is no chance that this person is going to have difficulty with the financing.
Well, that's a good question. As a listing agent, I often call lenders. Sometimes they don't call me back. Sometimes they do. But you as a agent working for the buyer don't mind when the listing agent calls you?
Not at all. In fact, I think it's beneficial to the transaction when everybody's working together as a team because ultimately, at the end of the day, the seller wants to sell, the buyer wants to buy, and the agents and the lender should all be working together to accommodate that.
Yeah, it's nice when everybody wins, right?
Yeah.
We want wins for everybody.
And it makes the process so much easier when everybody's working as a team.
Yes, it does. John, thank you for sharing your expertise with us today and for helping us understand all those things that go around with financial decisions. But if there's one thing that our listeners should take away from today's conversation, it's this. Successful real estate decisions are rarely about price alone. They're about understanding the financial goal and creating the right strategy to achieve it. Whether that's using a seller credit to help a buyer get to the closing table, structuring a transaction so you can buy and sell at the same time, or exploring financing options that create flexibility, the best outcomes happen when everyone focuses on solutions instead of obstacles. Real estate is one of the biggest financial decisions most people will ever make, and having the right team and the right plan can make all the difference. So, if you're considering buying, selling, refinancing, or planning a move in the next 6 months, now is the time to start building your strategy, not after you've already jumped into the market. Thanks for joining us today. I'm Joy Daniels, and that's Smart Real Estate.